Alright, so let's begin. And well-managed investments can grow your wealth over time and help secure your financial future. But all investments carry risk, and a key goal of your investment portfolio should be to minimize overall risk while simultaneously maximizing your investment returns. So let's welcome on board Kushal Lodha, founder KHGR. Understand how can you protect your portfolio from uncertainties. And Kushal, good evening and welcome to the show. Well, the best way to protect your portfolio from uncertainty is to have a very well diversified strategy. But then having said that, a lot of people don't understand what does actual diversification mean, and what they actually do is maybe just diversify themselves very well under one asset class. Now what happens is when you talk about uncertainties, and when I want to understand these uncertainties which are associated with different asset classes, what exactly do we mean by that? There are uncertain environment in the markets, and investment instruments that are not related to the market also have uncertainties. So what kind of risks are we talking about here, Kushal?
Sure. Thank you so much, Kavita, for having me. It's an absolute honor to be a part of this. Just answering to the question here, right? I mean, asset allocation in terms of diversification doesn't necessarily mean that you need to be diversified when you're investing in equities. By diversification, what we mean is that you need to have a very good portfolio in terms of investing in equities, bonds, mutual funds, index funds, and even gold. Like, for example, yesterday we have got to know that sovereign gold bond has been issued. And not only that, even in terms of real estate, investment trust, both the commercial as well as the residential, they have been booming a lot. So by that, what I mean is that every person, every individual should allocate a certain amount of wealth to each of these asset classes, asset portfolios. And for a person like me who's 24 years old right now, most of the proportion would get into equities, and certain proportions would get into gold, mutual funds, index funds, etc. So that is something which we mean by asset allocation and diversification. And talking about risks, I think rightly mentioned, right? I mean, a lot of these uncertainties are going around. Well, let's say the US Fed is hiking the interest rates, and apart from that, we're also having a lot of other uncertainties in terms of the stock market expectations. So a lot of these black swan events are coming into the place. And the best way to hedge for all these uncertainties is by diversification, firstly. Second is correct asset allocation in terms of proportion. And thirdly is by using some strategies in terms of covered calls or options as well, if you are into trading of futures and options.
Exactly. What about the fixed income instruments and the uncertainties and risks attached with that?
Right. So talking about fixed income instruments, right? I mean, the only challenge here is that nowadays, especially in India, right? I mean, retail investors investing in bonds, that has not become very widely common phenomenon as it is there in other countries. So for example, people are very much inclined to investing in equities, but they don't understand the benefits of investing in bonds. And there are like less platforms of investing in bonds as compared to investing in equities as well. Like few of the ones which come to the top of my mind are like Golden Pie, Altify, etc. But like the risks and challenges over there are that if let's say a corporate is issuing like let's say a AA or maybe a B grade bond, or like there are ratings of the bonds. So that kind of risk is associated with all the kinds of bonds where let's say the default rate, maybe the yields are higher, but the default rate are also higher in that case. However, in my opinion, a person who is let's say just about to begin his or her investing journey, they should ideally allocate 15 to 20% of their portfolio to bonds as well, given the fact that they're going to get a fixed percentage rate of return as well. Now, even if let's say you talk about the market uncertainties where you don't even know that whether you're going to get good returns in Nifty or Sensex, etc., it's a good way of hedging your portfolio where you're at least going to get some sort of return. If let's say not 15-20%, but at least let's say around 8% or 7% in case of AAA rated bonds. So that is something which I usually advise. And I think there are a lot of different companies, of course, without naming any one of them, but a lot of different companies have started issuing their corporate bonds. And you can just go on the websites and you can like try to analyze basis certain factors, which are the ratings of the company, the duration of the portfolio, duration of the bond. And apart from that, like how much maturity proceeds you're expecting once you redeem the bond.
All right. But when we talk about portfolio and we talk about the diversification strategy across asset classes, how does this balance actually strike off, you know, when we talk about uncertainties? The uncertainties attached with different investment instruments, all of them won't appear at the same period of time, right?
Right.
Could you explain the kind of balancing act that the diversified portfolio can actually help you with mitigating your uncertainties and the risk?
Sure, absolutely. So that's a great question, according to me. So see, like let's take an example. Okay, so now I was talking about index funds. There are a lot of index funds as well where they have a bunch of stocks under their radar, and then if you invest in these index funds, automatically you are diversified because they are already investing in a bunch of stocks and not one stock. For example, even if you talk about international investing, like taking an example of, let's say, N100 or the Nasdaq 100, which is an index fund where you can invest in today as well. Now, this is an international, this is a collection of the top 100 listed companies of the US which are listed on NASDAQ. If there's any uncertainty in the Indian economy, you are still safeguarded, or you are hedged. You have hedged your portfolio because you are investing in the top 100 tech stocks of the United States. And if you see the past returns also, you'll be surprised to know that the N100 has given like a 1 year CAGR is 43%. Of course, like this is an outlier. But if you talk about the 3 year, 7 year, and 10 year CAGR also, it has given around 20 to 22%. The point of stating this is that there are certain instruments which will definitely hedge you whenever there is an uncertainty in your particular country or your economy. That's one. Number two way of, let's say, hedging your portfolio here would be, let's say, diversifying your own wealth into different asset classes. For example, if let's say now there's a very decline in the stock markets, you can definitely invest in sovereign gold bonds. And as you know that the correlation between gold and equities has been negatively correlated over the last few years. That's a proven phenomenon. So having having a diversification portfolio of negative correlation asset classes will definitely help you if there's an uncertainty in one particular area or in one particular market. So if the equities are going down, you have already hedged and you are buying gold, and the appreciation in gold will definitely fetch you some sort of capital appreciation. And talking about sovereign gold bonds, you're already getting 2.5% per annum interest rate on a half yearly basis as well. So the advantage of sovereign gold bonds is again that you are investing in them, and the exempts and the capital gains is exempt if you are redeeming it at the end of 8 years, which is the lock-in, which is the maturity proceeds. So that is another appreciation or another benefit. And in the past few years, if you see the gold returns, like on an average, 8 to 10% has been the yield for gold bonds, and that is going to continue for the next few years as well, in my opinion. So this is the best way of diversifying, where let's say if there's a problem in one particular asset class, you are hedged, and your other particular asset class is definitely giving you some sort of returns.
Kushal, I think that's the word coming from you. Thank you so much for being on the show today and helping our viewers with uncertainties across asset classes. How can you mitigate all of that in your portfolio? But then we move on. Grandparents may have accumulated wealth over the years that they may wish to share with their grandchildren out of love, sentiment, or responsibility. Now, this can be done via investing in the child's name or giving monetary gifts. My colleague Snehisha is here to decode the various options, the procedure, and the tax implication for these. Listen in.
Grandparents may have accumulated wealth over the years that they may wish to share with their grandchildren out of love, sentiment, or responsibility. Now, this can be done via investing in the child's name or giving monetary gifts. If you want to gift or invest your grandchild, here are some points that you must keep in mind. First, the child is a minor, incapable of making a financial decision. The law considers any contractual decisions made before the age of 18 as null and void. Therefore, the investment has to be made, managed, and operated by someone else on behalf of the child in case the child is a minor. Grandparents who want to give gifts in the form of money or investment have to operate necessarily through the parents, who are the natural guardians of the minor child. There is no bypassing this. Second, contributions can be made by the grandparent into specified mutual funds, post office saving products, bank deposits, equity shares, and bonds. In all of these cases, the product must allow a third party, which is the grandparent, to make an investment for the child with the guardian, which is the parent, that operates the account. KYC and Aadhaar and PAN card linking will be required for parents as well as grandparents contributing to the funds. The minor child's birth certificate is also necessary to establish minority, and it also shows the name of the parents, who must be registered as guardians for the investment. Now, let's take a look at how these gifts are taxed. The Indian tax laws allow gifts to be received from a specific list of relatives. These gifts are not taxed in the hands of the recipient. A grandchild receiving an annual monetary gift from the grandparent does not pay taxes on the gift itself. However, any income arising from the gift is taxable. For example, a grandparent can make a deposit into the grandchild's bank account, but the interest income that arises from this deposit is taxable, and since the child is a minor, this income will be clubbed with the income of the parent that has a higher income and will be taxed along with that income. Now, what is the nature of this account? All investment accounts of a minor will solely be on a sole holding basis. Minors cannot be joint holders. Now let's take a look at how these funds can be claimed. When the child attains the age of 18, the money invested can be accessed. However, the minor now turned major must have a PAN and a complete KYC process and have their signature attested by the banker to be able to access the money in their name. Guardians now cannot operate the account once the minor has turned a major. So if you are a grandparent looking to gift your grandchild or invest in their name or to aid them in the future, keep all of these points in mind.
Let's also listen in to this special interaction that ET Now's Snehi Shah had with Harsh Rungta, founder Fee Only Investment Advisor LLP, and all the options you can choose from and how these options are taxed.
We are now joined by Mr. Harshvardhan Rungta, CFP at Rungta Securities on the show. Thanks so much for joining us, Mr. Rungta. Let me start off by asking you, what are the various investment options and avenues where grandparents can make investments for their grandchildren? And also, if you could explain how are these options taxed?
So I think like any other investments, when you are planning to invest for somebody else, what that need of that person is something that you ought to keep in mind. So one could be a very general purpose gift to a grandchild, and the grandchild is small, and that gift is big enough that it will have an impact on the grandchild's future. In which case it probably you need to do some careful sort of planning around where that will be invested, what kind of assets, whether you can look at equity, because if that future is going to be 8 or 10 years away, and then maybe you can systematically invest it in equity for the purpose of your grandchild. Other could be just a large gift, which a large, small, whatever amount which you would leave to the grandchild to sort of look out for themselves, in which case, it's pretty simple. You just transfer that money, and the grandchild, if the grandchild is able to take care of it, then, they will take care of it. You don't really need to have to bother about the investments. And then there will be there will be lots of variations in between this. As far as taxes are concerned, there is no tax when you sort of gift money to the grandchild, neither on you nor on the grandchild if the grandchild is an adult. If the grandchild is not an adult, then, the parents also don't have to pay any tax on that. There are various schemes available. See, this is a very emotive area. There are various schemes available in which if you invest, they sort of lock in the money till the child turns 18, etc. Some of them are the government schemes. You have the Sukanya Samruddhi, for example, which you can use for your female grandchild. Now that sort of an investment would have a lock-in. So if that makes sense, if the lock-in makes sense, then that is something that you could look. My point is that when you gift any money to your grandchild, what that money will be used for, when will it be used for, will have a big bearing on where and how that money should be invested.
I also wanted to understand from you, is it possible for a grandparent to start an SIP in the name of the grandchild if the grandchild is a minor, and what are the provisions on that?
I don't know whether recently the parents can have a joint account with the minor. So if it is a minor, if it is a major, then there is no problem at all. Of course, they can have a joint account with the grandchild and make a SIP as large as they want. That's not a problem, as long as the grandchild is a major. If the grandchild is a minor, then of course there would be issues surrounding the fact that the joint account from which the money goes would have to be operated either by the parents of the minor child and not really by the grandparents. So for a minor grandchild, there might be procedural issues, but those can be sort of overcome by involving parents. But otherwise, there is no real limit and no real tax implications on the gift.
Okay, so we spoke about all the investment options in which grandparents can invest money for their grandchildren. But now let's also talk about how is the income that arises from this investment taxed. For example, let's say if a grandparent has created a fixed deposit in the name of the grandchild, the interest income that arises out of it, could you explain to us how that is taxed?
So the provision is this, that the minor is not taxed on the income that accrues. So suppose now the grandparent gives a fixed deposit, gives a gift to the grandchild. The grandchild might be a minor, but might have a bank account, and into that account, the grandfather, let's say, gives a gift of 10 lakhs, and that 10 lakhs is put into a fixed deposit that earns at, say, 6%, which means it is earning 60,000 rupees. Obviously, that 60,000 is taxable, but it's not taxable in the hands of the minor. It will be taxed in the hands of one of the parents whose income is higher. So it is not because the money has come as a gift that it is taxable, but because any income of the minor is taxed in the hands of the parent whose income is higher. Taxable income is higher.
All right, so those are the mantras for accumulating wealth and investing for your grandchildren. But then we slip into a short break, and post that, let's talk about SEBI's framework that's issued for execution-only platforms. And we'll also talk about your investment in gold, and is it the right time to invest in gold? All of this with Kunal Shah after this break. Welcome back. The US Fed opted for a pause in rate hikes in its latest FOMC meet. Ahead of this pause, the US Fed had hiked interest rates rapidly to tame soaring inflation. The interest rate hike saw a huge flight of capital and investments towards debt and gold. But now that further rate hikes seem unlikely, should you go heavy on gold? Let's welcome on board Kunal Shah, Head Research on Nirmal Bang Securities, and answer these questions. Kunal, good evening and welcome to the show. So, a pause for now, but then how are you reading this when it comes to gold and its trajectory for rest of the months left for this year?
Okay, so about the first part of your question, pause. Okay, so this is the pause in the interest rate cycle, not the reversal of interest rate cycle. Yeah. So we are going to see this pause for some more time, maybe perhaps 3, 4, 5 months, at least conservatively, because the reduction of balance sheet is taking place. Fed is repairing its balance sheet, and right now it is hovering around $8.4 trillion. It is likely to come down below $8 trillion. So this is the quantitative tightening is going to continue in months to come. So this is not halting. So we are seeing a pause in the interest rate hike, but the quantitative tightening will continue. But in spite of all of this news, gold prices are not going down. So we are seeing redemption in gold ETF, slag jewelry demand in India, slag jewelry demand in China. So ETFs are not buying, jewelry demand is low, but then too, gold prices are not going down. The reason for that is the central banks, some of the other central banks are turning up and buying gold. Historically, we have seen central banks were not holding gold, but right now the options for them are very limited to diversify their foreign exchange reserve. And last year, if you see the average of 10 to 15 years, the average buying by central bank was 400 tons. Last year, central bank bought 2022 was 1150 tons. And this year, again, I'm expecting, so far it is roughly around 250 tons, but that number to increase and test 750 to 800 tons. So it's a central-led buying gold, led buying in gold, which is taking place. because central banks, in order to hedge themselves, in order to hedge their reserves, they have no choice. There is no other currency which is as good as dollar where they can diversify. So they are by force diversifying their reserves into gold, and that is going to lead to another spike in gold prices. And that's the reason why gold prices are not going to go down and still going to continue to move up.
What is the upside left when we talk about prices on COMEX and in Indian terms?
Yeah, so we've already seen so far 5.5-6% upside in gold futures on CME. And going forward, I'm expecting conservatively another 5 to 6% upside by the end of the year. The point which you discussed, the possibility of rate cut, right now it doesn't exist. Maybe if the economy worsens, so far economy hasn't gone bad, but if the economic data from US continue to disappoint, then that expectation will start to build in. So that will add fuel to the fire, because already central banks are buying, and if that kind of expectations start building up, then gold can conservatively test $2,090 to $2,100 by the end of the year. Next year, it is going to continue. Next year, another 10% return. So I am not expecting this bull run to abate, and this is going to continue, and gold prices are just going to move up exponentially, even from present levels also. The downside seems to be very limited.
In what scenario you think the downside can go more aggressive?
In a scenario where central banks are forced, central bank gets some other alternative where they can diversify their foreign exchange reserve. They get any other alternative currency which is equivalent to dollar. So such kind of scenario makes a compelling case for central bank to sell gold and to buy this kind of currency. So that is not going to happen, at least in a near future. Second, a cool off in the geopolitical tension between Russia and Ukraine. So maybe our Indian Prime Minister has gone to US. They are going to initiate peace talks between Ukraine and Russia. That's one of the agendas. Something like that happens, that can lead to a fall in gold futures. And the third most important point, Fed will again turn very hawkish and start raising the interest rate, which for the time being doesn't look the scenario. So the first two scenarios are the only scenarios where gold prices can, go down instead of moving up.
So it's often said that one needs to diversify in gold as an asset class as well. But then you think for people who have entered this asset class for maybe a short term or a medium term outlook, it's time for them to book profits, or maybe they can extend the time horizon till the end of this year, where you just mentioned, the prices can go up to 2090 and a little more upside from there, 10% if you talk about next year. Time to just hold on to it?
Absolutely. There is no point in thinking about even profit taking in gold, because central banks are buying. I would say when central banks are buying the gold, earlier they used to buy gold was not strategic. This time they are buying gold for more strategic purpose. So whatever is going on in the world, from the geopolitical scenario point of view, from the interest rate, monetary, still feel that, like I said, it is a strategic investment. Will continue to be in next 3-4 years. So I would recommend to go long in sovereign gold bond, which is going to fetch you 2.5% interest also. So it's a great scheme to invest in. You are getting interest for holding gold, and you are also contributing in India's growth story in this. So one should invest in sovereign gold bond.
Thank you so much, Kunal, being on the show, helping our viewers with their investment in gold. We'll slip into a short break. Post that, let's talk about execution-only platforms, and also let's get your mutual fund queries answered by Pankaj Matpal after this break. Welcome back. You're watching The Money Show with me, Kavita Thapliyal. The SEBI has introduced a regulatory framework for execution-only platforms in the mutual fund industry. Now, these platforms are now required to be registered and are prohibited from offering regular plans. So what exactly are these execution-only platforms, and how will the SEBI's latest guidelines affect mutual fund investors? Let's welcome on board Pankaj Matpal, MD, Optima Money Management and answer these questions. Pankaj, good evening. Welcome to the show. So let's just simplify this. What are exactly execution-only platforms that we are talking about?
Kavita, good evening. Before I explain this execution-only platform, I'll tell you why the need has arisen for this.
Sure.
And see, there are many stockbrokers and registered investment advisors who run such a digital platform where investors can complete their financial transactions related to mutual funds. So not only buying, selling on mutual funds, but also they can complete non-financial transactions. Now, if they are their customers, for example, if there's a registered investment advisor and his or her customers wants to complete transaction, then it is fine because these RIAs are registered with SEBI and they have some responsibilities. Investors have some responsibilities towards their RIAs. But because those investors who are not registered or who are not customers of these intermediaries, they can also complete transactions. So they may find it very convenient, but if there is any risk associated with these transactions, then nobody will be responsible. But ultimately, these investors are not clients of those intermediaries. So considering this risk, SEBI has introduced this education-only platform where these platforms will provide this service. Investors can complete their education on this, but these platforms will not provide regular plan. These investors can invest only in direct plans, and because there will be a framework, there will be regulation for these education-only platforms. So any risk associated with these transactions, either the stock exchanges or the SEBI will take care of that.
Pankaj, does this also mean that now the cost for an investor will go up because these platforms were offering this service for free along with the advice? So now the customers will have to pay. So eventually investors, it's an expensive thing for them?
Kavita, see, there are two categories, category 1 and category 2.
Okay.
The category 1 entities have to be registered with MP. There means the cost will be borne by fund houses, means AMCs. So it will not impact investors' cost. And also it is mentioned that fund houses cannot charge this cost in the scheme. So ultimately means there is no impact on the investors. But when we talk about the category 2, where these categories have to act as a stockbroker or they have to register with stock exchanges. So they will charge some flat fees. And this flat fees will be charged from investors. So in this case, definitely the cost of the investor will increase. That is one part. Second thing, as you said, that right now, these platforms are also providing advice. In such case, an investor is not going to any distributor or to an advisor, and directly they are taking some advice online through this platform, or which are called rope advisory, basically. So they get some advice automatically on the website itself, and then they go for execution. That cannot happen now because these execution-only platform will provide only execution, no advice. So in that sense, yes, if investors, they also want some advice, then they have to go to registered investment advisor, or they have to go to mutual fund distributors. So if they go to mutual fund distributors, in that case, they will buy regular plan. That is altogether different chapter. But if they go to registered investment advisor, then in that case, definitely the cost will increase. They will have to pay the fees to the RIA, as well as means they may have to bear this cost as well.
So if the EOP registered with AMFI, they can charge a certain amount, which obviously will not be uniform. But if you are going through a stockbroker EOP, then that will have a fixed charge across the board, right?
That's right.
Okay. All right. So that's all about execution-only platform. So then, last question again. What should investors actually do, and how can they also identify which EOP is registered or not? Will that be obvious on the platform whenever you go to buy or take advisory from any platform?
The advisory they will not take from the platform.
Yeah.
That is because education only platforms are will be available. So for September, once these are operational, definitely it will be mentioned there. And when we're talking about the stock brokers platform, they definitely like the Zerodha or some other entities means they will have this kind of platform. I believe, example I'm quoting, not like such brokers. They may have these platforms. So the investors who are investing through the brokers, they may opt for this. Otherwise, for other investors, it will be better. I believe that they will go for the entities which are registered with MP because they do not need to pay anything for that. As I mentioned earlier, the cost will be borne by the AMCs. So that may be a good choice for them, for the investors who do not want advice and or they take advice from the
Plans won't become expensive,
RIAs,
no?
and
So-
then they go for
So
the
Pankaj,
execution
the direct plans won't become expensive, right? Or that is a
No.
concern.
Yeah, no, not at all, because as I said, the cost will be borne by the AMCs.
Right.
And they cannot add it to the schemes.
Okay.
They will not add.
All right. So that was all about execution only platform and how it will impact you as an investor. Let's move on, and we have our viewers on the phone line with us who are waiting to ask their mutual fund queries. I have Mr. Gopiraj online with me. Hi, good evening. How are you doing, sir?
I'm doing well, thank you.
Thank you so much for sending us your query. I believe you have ICICI Pro Large and Mid Cap, L&T Mid Cap, Sundaram Consumption Fund on you, and you want to continue investment for next 10 to 12 years, and you've been investing since 2018. What's the SIP amount?
See, earlier it was 5,000 rupees from when I started it, but then right now it's monthly 10,000 rupees is what I'm doing in the 3 funds. So 10,000, 10,000, 10,000.
Okay. And these are regular plans?
Yes.
Okay. You have also started investing through direct plans in other funds from Jan 2023, or you've switched from these regular funds to a direct scheme?
No. My query is that because I have been there in the regular plan, this
Right.
was basically from, the friendly neighborhood uncles, they give you that. But at that time, my knowledge about mutual funds was very little.
Got it.
So I started with the regular plan.
Okay. Okay.
Now, even in the regular plan, my corpus has been built to a good level and I'm sitting on a good profit also.
Mm-hmm.
But now that the amount, the corpus amount is increasing, the charges are higher on the regular plan.
Mm-hmm.
So what I started doing on my own was that from 2023, on the same schemes, I have started going into the direct plan.
Sure. Okay. Okay.
Now, what my question is that the amount that is there in the regular plan, is it a good idea to just sit there and then the new SIPs in the direct plans, let them continue for the next 10 to 12 years?
All right. Pankaj, I think he's already opted for a good strategy. What will you say?
Gopiraj, say, if you're not availing any service from your distributor and you're not taking advice, in that case, even you can redeem your units and reinvest that. As you mentioned that you are in profit. So you are reinvesting the profit as well as your principal amount. So it will not make any difference whether you stay invested there or you redeem and reinvest. The benefit is that you will save some cost. As you know, and you mentioned it, that in regular plan, there is little extra cost is involved. So you can save that. So you don't need to worry about this thing that because you have profit. So if you again switch or reinvest it, so whether you lose the profit, no. So you can definitely redeem it and reinvest it. So that is one part. Second thing about SIP, as you have already started in direct plan, you can continue. But yes, I will tell you something about your portfolio. See, had it been like schemes are good, then you could continue. But in your case, I suggest you should make some changes in your portfolio. The reason is, first thing, that HSBC mid-cap fund, it has a very aggressive portfolio. So if you're thinking about 10 to 12 years, better you should go to a fund which is well diversified, has a better portfolio. See, this kind of schemes may outperform the other schemes during a particular period. But for a long term, I believe that the scheme should be able to generate alpha. So with a limited risk, higher returns should be available. That should be the strategy. Second thing about Sundaram Consumption Fund. See, this is a thematic fund. As of now, at this moment, I will say that consumption is a very good theme. But still, one thing for long term, always diversified funds are better. But if you want to stick to a consumption fund, so instead of Sundaram Consumption, I will suggest that, like example, SBI Consumption Opportunity Fund. That will be a better choice. So if you are redeeming your units and want to reinvest, so reinvest in these schemes. Like I said, SBI Consumption, and in mid-cap, you can consider Motilal Oswal Mid-Cap Fund. So you can redeem and reinvest in these schemes.
Gopiraj, anything else that you want to understand or ask Pankaj?
That's about it, madam. Thank you for your time.
Thank you. All the best. We move on. We have Sunil Kumar Singh from Jharkhand. नमस्कार सुनील, कैसे हैं आप?
नमस्कार, मैं ठीक हूँ मैडम, आप कैसे हैं?
मैं बिल्कुल ठीक हूँ, धन्यवाद। अपना सवाल आपने हमें भेजा। आपने 2 लार्ज और मिड कैप फंड पोर्टफोलियो में रखे हैं सुनील, टाटा का और आईसीआईसीआई का। कोई खास वजह? दोनों ही एक ही कैटेगरी के फंड रखे हैं। क्या आपको दोनों फंड्स के एलोकेशन में, एक्सपोजर में कोई बदलाव, डिफरेंस लगता है?
नहीं, ऐसे तो टाटा पे बिलीव था, मगर आईसीआईसीआई भी अच्छी थी। हमने सोचा कि एक ना काम करे तो दूसरा काम कर जाए।
अच्छा।
इसलिए थोड़ा सा उस जानकारी के लिए मैं टाटा को थोड़ा ज्यादा ही विश्वास, क्योंकि हमारे पास टाटा की कंपनी है।
अच्छा 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 अच्छा।
हाँ, अगर इसमें चूज हो तो इसको चेंज करने की सलाह है तो कर सकता हूँ मैं।
बिल्कुल बताएंगे आपको। इसके अलावा एबीएसएल का फ्लेक्सी कैप भी लिया है और एसबीआई स्मॉल कैप भी लिया है। एबीएसएल का फ्लेक्सी कैप तो परफॉर्म ही नहीं कर रहा है सुनील, क्यों लिया आपने? कब लिए हैं ये सारे फंड्स?
ये 3 साल हो गए।
3 साल हो गए। चलिए, कब तक रहेंगे इसमें आप इन्वेस्टेड?
कम से कम 10 साल।
कम से कम 10 साल ना? कोई लक्ष्य को बांधा है इन फंड्स के तहत, इस पोर्टफोलियो के तहत?
कम से कम हमें लक्ष्य को बांधा था, कम से कम 50 लाख हो जाए हमारे बच्चे के एजुकेशन के लिए।
निवेश बढ़ा पाएंगे ना?
हाँ, निवेश तो बढ़ा पाऊंगा।
ठीक है, अच्छा लगा आपका सवाल जानकर। पंकज, व्हाट विल बी द सॉल्यूशन फॉर सुनील?
सुनील, देखिए, पहली बात तो स्कीम को लेकर, जैसा अभी कविता जी ने कहा कि आपके पास जो आदित्य बिरला सन लाइफ फ्लेक्सी कैप फंड है, इसकी परफॉर्मेंस काफी खराब रही है, तो शायद आपको पहले निकल जाना चाहिए था। बट अब जरूरत नहीं है, क्योंकि इस स्कीम के पोर्टफोलियो में कुछ बदलाव किए गए हैं। सेकंड थिंग ये है कि कुछ टाइम से वैल्यू अप्रोच जो है इन्वेस्टमेंट की, वो ज्यादा अच्छा काम कर रही थी। बट अभी आप देखेंगे तो कुछ टाइम से हमने देखा है, पिछले कुछ समय में ग्रोथ ओरिएंटेड फंड्स ने बेटर परफॉर्म करना स्टार्ट किया है। इस फंड की जो इन्वेस्टमेंट अप्रोच है वो ग्रोथ ओरिएंटेड है। सो आई सजेस्ट दैट यू शुड स्टिक टू दिस आल्सो, एंड अदर स्कीम्स आर आल्सो गुड इन योर पोर्टफोलियो, तो यू शुड स्टे इन्वेस्टेड। तो स्कीम में कोई बदलाव की जरूरत आपको नहीं है। बट लेकिन जैसा आपने कहा कि आपका जो टारगेट है उसको लेकर थोड़ा सा आपको इन्वेस्टमेंट बढ़ाना पड़ेगा। आप यदि जितना भी इन्वेस्टमेंट कर रहे हैं 13,000 पर मंथ, with this you can expect 29 lakhs in 10 years, but because you want to accumulate 50 lakh rupees, so you should increase your investment। अभी मतलब immediately आपको 2,000 रुपीज से तो अपना इन्वेस्टमेंट बढ़ा देना चाहिए। अगर आप 13 कर रहे हैं तो इसको 15,000 पर मंथ कर दीजिए, और उसके बाद एवरी ईयर 10% से आप इसे स्टेप अप कर लीजिए, ताकि जो आपका गोल है 50 लाख का वो आप अचीव कर पाएंगे 10 इयर्स में, यदि 12% या 12% का CAGR आपको यहाँ पर मिलता है, which I expect in 10 years you will get it। So all the best to you। स्कीम में पोर्टफोलियो बदलाव की जरूरत नहीं है, बट अमाउंट आपको बढ़ाना पड़ेगा।
सुनील जी, सलाह समझ गए? कुछ और पूछना है पंकज जी को?
नहीं, किस फंड में बढ़ाना पड़ेगा? एसबीआई में कि टाटा में कि आईसीआईसीआई में, किस में बढ़ाना पड़ेगा?
यस, आपका क्योंकि 10 ईयर का होराइजन है, तो मैं आपको नहीं कहूंगा कि स्मॉल कैप में ज्यादा बढ़ाइए। आपने 2000 किया हुआ है, उसमें भी आप ऐसे 1000 और बढ़ा लीजिए, कोई प्रॉब्लम नहीं है। और बाकी जो है वो आईसीआई से पोटेंशियल लार्ज एंड मिड कैप में बढ़ा लीजिए।
धन्यवाद सुनील, अपना सवाल हमें भेजा। Alright, so we move on. We will take Ramesh's question now. Alright, so this question is via email, and he's investing 1,500 in Nippon India 50 Index Fund from last 1 year, and he wants to understand if he can continue his investment in this fund. Pankaj.
Yes. See, in index fund, when we invest, we should expect returns as the index can give. So because all index fund will mimic the portfolio of index only to which they track. In this case, when you're talking about Nippon India Index 50 Nifty 50 fund, so it's a large cap index which invests in 50 top companies. So he can definitely continue it, but for long term, I'll suggest that Ramesh should add one mid cap fund to his portfolio if he wants to increase amount or he wants to invest a fund, and that will be a passive, that will be an active fund. Because in large cap, investing in a passive fund is a good choice. But when it comes to mid cap or small cap fund, my suggestion will be that Ramesh or any other investor should add actively managed fund in their portfolio. And a scheme name also can suggest here. Again, in mid cap fund, Motilal Oswal mid cap fund is a good fund and a fund of my choice. So you can consider it if you want to add.
Pankaj, with that, thank you so much for being on the show and helping our viewers with their financial portfolio queries. And we move on. Next up, we've Leader of Tomorrow in conversation with Ravi Saxena, CEO WonderChef, who elaborates on the need for fostering female entrepreneurship and further highlights how WonderChef is encouraging the same. In the second segment, we have an insightful discussion with Gaurav Malhotra, Managing Director, Hansogrohe India, delving into the home alliances market and sharing the big trends that the sanitary ware section is likely to witness. Listen in.